All right, now content creation in South Africa is growing fast, with many influencers making money through brand deals and online partnerships. But now, the South African Revenue Service is warning influencers to make sure that their tax affairs are in order. The Revenue Service is investigating unreported income from online content creation as it pushes to recover more than 500 billion rand, should I say, close to half a trillion, should I say, in unpaid taxes. For more on this, we're joined by Keitumetse Sesana, the Acting Deputy Chief Executive Officer at the South African Institute of Taxation. Keitumetse, thank you so much for the time. Can this be done? Is this a real thing? Can South African Revenue Service actually find that income that you're earning just off social media?
Good morning, Arabi. Thank you very much for having me, as well as to your viewers today. And the short answer is yes. I don't come bearing good news today. Influencers, it's a new age of digital content creation, something that, what influencers do today is something I can't do. I try to do a TikTok for 30 seconds and I really can't do it. So I have the utmost respect for content creators. However, we need to go back to the basics when it comes to taxation. In the early 2000s, South Africa moved to the residency basis of taxation. That means that if you're a South African tax resident, per Section 1, every single rand and cent that you make, save for a couple of exemptions, is taxable here in the country in which you reside, being South Africa. So that includes any income that you make as a social media influencer from brand deals, whether it is locally or internationally. Every rand and cent falls within your gross income calculation into your taxable income, and the SARS can rightfully collect that money.
Yeah, they say regulation follows innovation, Keitumetse. So here you have a situation where innovation was created and now the regulation is coming. Is $500 billion really the tax gap we're seeing here? Can SARS really collect that much from this?
So SARS can collect that much and even more. There are industries, low-hanging fruits, such as this digital content creation industry, other billion-dollar industries where the right amount of tax is not being collected. So yes, that amount can be collected. We had some conversations with SARS earlier this week, actually, and they've estimated the gap to be around 800 to 400 billion rand. We have to go back to basics here, Arabile, and many people say that I'll speak for SARS, but I just speak for what SARS and regulators such as ourselves, the SAIT, are coming to a common understanding. SARS is out to collect the right amount of tax. If you look at yourself and myself and the many other viewers today who are joining us, we are generally salaried employees, right? So your employer, Newzroom Afrika, will withhold and pay the PAYE over to SARS before you even see the money in the bank. It's gone. It's paying for your fair share of staying in this country. This side hustle digital economy, something that even, internationally, such as organizations like the OECD, the Organization for Economic Cooperation and Development, are still trying to grapple with. So people that work in this digital economy are not having their taxes deducted from their salary and paid over, as is the case with normal South Africans. And one canon of taxation is equity. So that's not equitable. The fact that Arabile pays PAYE and Keitumetse pays PAYE, but a digital content creator is not paying that. So we're trying to level the playing field. In these cases, because we're trying to tax the digital economy, but that's a separate discussion. They're trying to tax all these mega companies. But influencers are slowly coming onto the radar here because they're earning monies that are not being declared. Yeah. And it is not equal for a salaried employee to pay tax, but they're not paying tax. And it's not about paying too much tax. It's just the right amount of tax. So if you start out by creating a funny video in your lounge and you're dancing and you suddenly have this barrage of followers and you're getting content and brand deals, that is all income that falls within your gross income that must be declared and paid over to SARS. My question then to you, or the next leg of the bad news here, sir, is that can SARS see this money? Yes, they can. One thing that we appreciate about this commissioner is that he's powering a whole of government approach. So anything that lands into your bank account at Bank ABC, if those cash and receipts and accruals do not tie up to what you're declaring to SARS, assessments are raised, audits are conducted, and verifications also follow suit. So you cannot hide the income that you receive either in cash, I must make it clear, or otherwise. So if you are paid in a holiday, let us go and, promo this particular Airbnb, wonderful, Mpumalanga, great. And they're paying you in kind. The value of that stay also has to be declared in terms of your
Wow.
taxes. So all in all, if we go back to the basics of Section 1 of the gross income definition, this money must be collected. It is only part of the canons of taxation of equity, and it's all the right amount of tax. So SARS is not left content creators in the lurch here. There are ways in which you can regularize this. I read an article earlier this week, and I must admit that, if you're a content creator, often these content creators are also young children, so they don't even understand their tax obligations. In that case, it is important for you to seek the advice of a registered compliant tax practitioner who can bring this to your attention and help you regularize your affairs, register you for taxation as a taxpayer. They'll probably fall under a provisional taxpayer. So those are taxpayers. It's not a separate type of tax. It's just a type of tax where you need to estimate your liability. So you tell SARS, hey, I might get a brand deal amounting to 60,000 for the year. I'm declaring it upfront. I'm going to pay my taxes upfront to you in Feb and August, and maybe top up in a third payment. And if you've paid SARS too much, they'll refund your money. They usually do that in 72 hours. But you have to register, and you must realize that any cash or anything in kind falls within that gross income definition. And if you're a resident of South Africa, you have to pay it.
We're shattering a lot of people's incomes here and thoughts on this money-making aspect. I mean, there are other elements to this. Is somebody would claim that, they're doing it within what is then their office space, and anywhere that they create this content is their office space, and they can claim rebates from that, etc. And I guess that goes to the complication of filling out your tax form then, and what that will then look like from here. But what is the right amount? At what rate would you then tax those incomes?
So you need to fall into a specific bracket. If you cross the threshold, you'll see the 2026 year of assessment. There's specific tax rates or tax thresholds that if you cross, you would then need to pay your taxes in relation to any individual. Those are definitely available on the SARS website, National Treasury. But one thing I'd like to circle back to here, Arabile, is that you mentioned even if you're doing this in the comfort of your own home or in your office, etc., there's actually a draft tax proposal that's on the table now, Section 20 Cap A, where they are ring fencing side hustles specifically. So I might be a content creator who is doing this, taxation skits in my office after hours, and I'm generating income. Usually that was to ring fence the losses for higher income earners, but Treasury is reducing it. So even if you're in the 39% tax bracket and lower, that middle class that's doing all these additional side hustles and brand content creation, you wouldn't even be able to set off your losses anymore. The threshold is now much, much lower. So if we look at it holistically, SARS and Treasury have seen this particular industry. We see it, I believe. We can see it. Then the Treasury and the SARS can see it. And they have employed highly technically skilled people and highly, competent AI algorithms, and they pick up things that we don't even pick up. I would be remiss, this is my last thing, sir, that even if you don't declare the income, there are third-party appointments, there are garnishee orders, A88s. SARS can, after a lengthy process has been undertaken and they've let you know about the debt and you're not paying it and there's a final demand, they can actually take that money from your bank account, and that would not be good for you as a content creator. So it would be imperative for salaried employees, content creators to all assess what your liability is and just pay the right amount of tax so that SARS can lessen that tax gap. And, actually, this is my last thing. If SARS collects the money that they are supposed to collect, we saw the Minister of Finance saying in the Budget 3.0 that there might not even be a need to raise taxes next year. So it is all in our interest to pay the right amount of tax, seek the proper advice so that we don't see, a VAT 1.0, 2.0, 3.0 next year again.
I want to ask you what the impact on these brands and these agencies and all those perks would be, but that would be out of your purview. But even for them, tax-wise, they would need to consider this too, in whether it be in terms of their invoicing, in terms of how exactly they go about this. Could this create a totally shall we say, more difficult environment for this sort of thing, and ultimately create a difficulty for yourselves as tax practitioners too?
Yes, it would, because in instances like this, and I'd need to apply my mind more to this, but we're creating a presence now for these brand people, maybe who are overseas and who are saying, hi, here's a lipstick, try it out. And if the link would be so delineated that a influencer then considered to be an employee, then we're going into a whole different other quagmire where, those foreign entities now have to register. Do they have presence here? And that might actually disincentivize, people coming into South Africa and, middle-class people or influencers trying to make some extra money. So that's a whole different ball field. But there might be implications that are incumbent upon them. But for this leg, and you see it in many other, amendments, look at the amendments to the trusts, Section 7, Section 25, SARS can collect, or National Treasury, it's easier to collect from your resident who's here in the country than from your non-resident who is not here. Because following the money to another jurisdiction, then we've got double tax agreements, and then the state says you can't touch our money, it's ours, South Africa can't touch it. So it's easier to get them here in South Africa. And that's why, coming back to the brand creators and the content influencers who do amazing, impeccable work, but that does not negate their liability in terms of taxation.